Yeah, I mean, again, as you guys know, I love to look at real final domestic demand because it takes out that
Real
sort of
final
import
domestic demand?
noise.
Really?
Yeah, because it's just basically what people are spending domestically
What do you
versus import noise from the CapEx boom. Remember, we had a low GDP print because we imported a lot, and also the inventory cycle was doing what it did, which
Okay.
was a boost.
So what's domestic final sales?
Strong. And this is what the upgrades are. And they're sticking apparently in Q2, which is good because now we're starting to see the finalization of that. So we had good momentum coming into the third quarter. The worry here, again, is that we're going to be losing some of this momentum. So this personal spending number is catching my eye a little. And we also recently had a big note out from Goldman basically saying that their July and August data is showing that there is a slowing in consumer, despite all the boom we're seeing at the U.S. Open and the World Cup and all that. So there's a little bit of a divergence here with the momentum coming out of Q2 going into Q3, where we're going to still have this fixed investment boom from CapEx and from the reshoring and from the defense spending, but the consumer itself now is looking more wavery.
Can I just say, Michael Ball starts talking and the 10-year moved 2 basis points.
I know.
Higher
It's just-
yields
it's just
here right
moving.
now.
So you go out there. What is if you were at the Fed here, what would be your big concern? What would you want to get a little bit smarter at? Maybe at Jackson Hole here.
Yeah, so again, this probably isn't going to be a great platform for speaking about policy.
Okay.
In its core function, because again, this is about the future payment systems, and this might have to do with why crypto again is having a couple of good weeks here. It kind of falls into some of that. But to your point, guys, we need to talk about what the actual structural inflation story is versus what the cyclical story is, and what the Fed can affect.
So parse the distinction there.
So that's a great question that I think they need to clarify, and I myself am not clear on, because what do we want to do? Do we want to step on AI CapEx inflation? No, probably not, right? Do we want to actually look at wage inflation? Well, that's not actually going going anywhere. So then you have a case to hold. So there are plenty of things to cut and parse through as far as the inflation picture, which is exactly why we heard from War said he wants to take a different look at it.
Second quarter GDP price index 6.2, which is ginormous, and it came in even bigger than that, 6.4%. That's not a normal economy, is it?
No, again, and it's a tale of two stories here. We have a real drive not only from AI build out, but also from our own government to kind of reshore, and then obviously we have a lot of defense spending coming through now. So the fiscal pulse has been quite strong. That's expected to fade into year end, but that's clearly reflected in Q2 data. And again, the momentum right now is pretty strong. So we are looking at an economy that is above trend, and that is a problem for the Fed, given that inflation remains stickier in that kind of backdrop.
WIRP, the World Interest Rate Fund probability, blah, 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 blah. Market's pricing in a 1 rate hike by the end of the year. I don't know. How do you think that looks these days?
Yeah, after July, when we had sort of the lack of communication from the press conference, that's exactly where it went to.
Okay.
And actually, we crept into January and out of December. Now the idea being, if they don't go in September, which again, it's not looking too good as far as what probability is. Now, let's keep in mind, when we went into July, I think we were somewhere around between 30 and 40% chance anyway, and that was one of the lowest probabilities going into a meeting, which goes to show this new era where the chairman doesn't want to guide markets into a meeting. So we need to get accustomed to this new reality.
Okay. I just found the statistic I was looking for. Thank you, Google Gemini, for this. Nominal GDP ending second quarter, first look, an annualized rate of 7.9%.
Yeah.
I have never perceived that in my academic life. I've never witnessed it. That's something I get out of Southeast Asia, given a war going on.
I mean, me and you have talked about this for a couple months now, about this reacceleration sort of, and it's broadening as we get, the consumer was active in Q2. This is why the market is doing quite well, the stock market. I mean, this is why it's not about AI anymore and momentum and higher beta trading. It's about a broadening and a rotation into more cyclical parts of it.
And I understand Druckenmiller, I'm going to say, look, I took this off AI. Anna Wong's smarter than me. She's going to figure this statistic out. But Paul, 7.9% run rate on nominal GDP tells me in no way, shape, or form is this a normal Jackson Hole.
No, I'd be interesting to see kind of how people factor in today's data into the discussion. AI, Michael, how much of economic growth, of that number Tom just quoted, how much of all this is AI spending?
A good chunk of it. And again, that's sort of where we get this kind of tale of two cities. And I'm, again, going back to this real personal spending being zero. It's good that income was up. When we adjust that, though, for inflation, that's obviously going to be a little lower. But what we need to see is it's not just a fixed investment boom in a certain pocket that now has become highly political and very uncertain, and also very expensive. meaning that every kind of buck they're spending in CapEx now gets less marginal compute because everyone's kind of rushing into, one door at the same time.
Didn't think about that.
So we want to see the broadening out, and we want to see the consumer play its role. And again, the worry is that we are going to become more tapped out as people are going into savings, going up in credit spending. But this has been a story I've been told for quarters now, and that the resilience of the consumer has kind of baffled everyone, and it continues. So I'm not calling for an immediate end. I'm just saying this is where all eyes are.
How urgent is it to get the run rate of our economy down to begin to get inflation back to, forget about mandates, forget about Taylor and the rest of it? What's the urgency to get the vector on inflation lower?
I mean, one would argue not urgent, or they would have gone in July. There's been no material change since that.
Why is it not urgent with a banana republic nominal GDP?
I mean, a lot of theories on that. We don't want to step on sort of the overall consumer by raising, rates and tightening Main Street while trying to pop maybe a financial bubble or some froth seen in real assets.
So in Jackson Hole, it's a political Fed.
Could be.
They can't step on half of America flat on their back because somebody's paying Paul Sweeney ticket prices at the U.S. Open.
Yeah, but this is a divergence. Like when you heard from Hammock and Logan, they're talking about what their business, they're telling them the cost increases there, the problems they're having with managing that. And when you talk to some of the other guys, the more dovish guys, they're talking about Main Street and they're talking about the consumer.
Paul wants to get one more in here quickly. Beth Hammock, I believe, leading our coverage on Friday.
Very good. NVIDIA after the close tonight. What's a macro guy take away from NVIDIA? What are you going to be looking for?
Yeah, so I've been looking sort of for NVIDIA to reassert this kind of AI CapEx winter momentum, which is cool, and actually kind of split open, right? So there's certain parts of AI still doing well, like optics and memory, where you've seen some of the core chip guys and others lose momentum, and it's been more of a divergent trade versus this just higher beta, all ships rising, anything to do with AI. So what we need from NVIDIA is maybe to settle some of that. Just the passage of that event being in line would help cool that, and then you get, the volatility picture sort of settles, and again, more participation, because that really has been a laggard. Sort of, semis have been one of the bigger laggers, and they're right on top of momentum. All that kind of needs to settle a little for the market's breadth and the broadening that we see to continue in a healthier way. Like, we don't want to see AI left behind. We want to see everyone to participate if you want to keep going to 8,000 XPX.